Hey guys, it's Will here. I want to talk about some trades that I just did yesterday and I sold them this morning. This is all to help you, and it's not trading advice obviously, but just sharing what I've done and my philosophy. I'm still learning some things and refining some of my techniques, but as far as getting into certain stocks, I'm getting a better sense. And right now there's an incredible opportunity with the potential recovery in the economy and stuff, even though there's a lot of issues still. There's a sense that things are going to come back over time. So what I did was, yesterday I was looking at these charts and I was deciding when to get in. There's an ideal time, but what happens is, if you look at the charts, there's this, what I call an up curve. You can call it a J hook or something like that, but it's an up curve. The slope is increasing like this. And what I try to do is find it, as they're breaking out, because, you can be too early, you can be too late, but basically you can see here. So I'm using this 8 exponential moving average, and up here is a 34 and this is a 50. And you can start to see it starting to curve up. So this is NAIL. It's a ETF that is for home builders and supplies. And that's the other thing I was thinking about, was as the economy starts to recover, which ones got beat up the most? There's a bunch of them, but one area was the home building. And so one thing I mentioned in another video is you can put an alert, like if you see this sort of flat section, like consolidation or bouncing back and forth in a small range, you can put a price alert right around there, and then you'll catch it as it goes up like that. The other thing you can see is that there's a gap in between each day. So that means like there's a lot of excitement. It's gapping up in between. And you might be afraid, like in my case, when I saw gaps like this, I would be afraid of thinking it's too late. But one of the things you can do if you pull back a little bit is you see these moving averages. This thing's dropped a lot. And so these are kind of potential target areas to reach. So there's still good potential there. But ideally, I like to get it, closer to this moving average down here. So yesterday I decided to buy, I kind of bought a whole bunch of things. And the idea was to buy some like value type stocks, things that were beat up, areas that were beat up quite a bit. So that was, like I said, the home builders. There's another one called the regional banks. You can see the same sort of curve. Now these first few stocks here I'm going to talk about, they're actually 3x ETFs, so they're leveraged ETFs. And contrary to most people's opinion, you can hold them for overnight. It's not just for the day, because you just look at the price in and the price out. That's all you need to care about. So this was around 55 and now it's 86. So any adjustment in between on a day-to-day basis is irrelevant, really. It's really what you're buying, what you're selling it for. So you can see here as well that regional banks got beat up pretty badly, because you figure a lot of people are gonna, go bankrupt and stuff like that, not be able to pay loans and everything. So that's also curving up. The other one is retail, and you can see that same sort of curve. So you could put, like an alert around here when you start to see it go up. Then, that's a good indication. Now, right now it's close to the 50 moving average, so you want to see what it might do around here. And then there's a big gap up to here to get up to the 200. There's no guarantee it's not going to go straight up like that. But, and then similar to the regional banks, there's another one called the financial bull. So these are all pretty risky ETFs. They're 3x leveraged ETFs. But you can see, hopefully, that there's this up curve here on every one of those. And then, so what I did was, because those all make sense, like the banks are going to come back, and the retail and that, those logically kind of make sense that they could potentially be on their way up. Another, let's see, I don't have it. Another ETF, which is the gaming, so it's all the hotels, and you have a similar situation, not as severe, but there's an up curve there. And then all the airlines, so you've got, in the States, you have Southwest, United Airlines, Delta, and you see that curve. So this is kind of what I'm looking for. Now you can see in other cases there's curves and then they don't succeed. So it's not a guarantee that every time there's a curve like this, it's going to go, infinitely high. But you can, if you can get near the entry point, you could potentially get out before it comes back down. So like I want, right now I kind of want to see if it's going to bounce off any of these moving averages. And I also bought some, sorry. So in Canada, I'm going to show you some stocks. And this is an airline, and I saw the same sort of thing. I saw this up curve here. Norbird, it's like wood paneling. Hopefully you're seeing the same. Now you can see here that it went up to this a little bit above the 50 and came back. I'll get into a little bit shorter time frames in a second. This one's broke through the 50 and it's going up. Stelco Exchange Income Fund is a REIT actually. And this one's good because it's already gotten past the 50-day moving average, but it's got that up curve you can see. And then this is Imperial Oil now. Oil's been doing really well. So just give me a sec here. So I bought all these, but what happened was when they spiked up in the morning, we'll take a look at Nail. If we look at the morning, when I started to see it coming down like this, I just decided to sell, and I thought I might get back in if I see a recovery. Because in this market, it's very volatile. So you could technically hold, if you're going day to day, you could hold it definitely long term. Some of these are still looking really good. So it's a little bit different philosophy because right now, like I said, I notice a lot of times I buy, it spikes in the morning. Like if something stocks to spike, I end up watching it go back down quite a bit. This one here has actually done really well. It's still going up. Retail has done really well since the more initial spike. It's still gone up. And this one. So there's a bit of a slow uptick here since the initial pullback. And then, I don't know if I have all the ones. There's a few I might have removed, but you can see here, there was quite a pullback. So I got out right at the beginning just to lock in the benefits. And if you take a look at some of these, they're not doing too bad. You'd have to compare. See, they're down from where they were at the high. OSB, that's down, but it's starting to slowly come back. And this one is about flat from where it peaked initially. So I feel like I've noticed a pattern, like a lot of times in the morning, if you get this incredible spike, I just get out and I'll look and see if there's an entry opportunity to get back into. And this was a 5-figure day today, so I'm pretty happy. But like I said, if you look at the day charts here, a lot of these are still pretty viable in terms of holding. Now these are, like I said, you got to watch the 50-day or the 34. They're kind of right at that point. So it's probably a good idea. In my case, this one's already gone past. And that one is, sometimes they go past the 50 and they come back a bit. So it's kind of at a critical point in terms of watching. You can see here, this may be hovering around there. So I probably want to get it on the push up to the 200. And, there's still room. And then once it gets past the 200, there's room for it to go up even more. The other thing you want to look at, and in Canada, or for TC2000, it doesn't really have these perfectly, I don't think. Let me just check. Yeah, it has some of the dates here, but there's one or two that are still, there's a earnings report. So you have to make sure, or I don't like to trade around their earnings because you don't know what's going to happen. If it's good, or even if it's good, the earnings are good, they could go down or vice versa. So, but the main reason I wanted to do this video was to show you how I'm looking at these J hooks or up curves. And I want to give a shout out to Steve Bigelow in the Candlestick Forum. I'm learning a lot from him, and I've got a book of his, and I watch a lot of his videos. And I'm still trying to develop my own exact philosophy because, like I said, you could hold these from a day-to-day basis, but I'm trying to get the profits where I can, and it's working out well so far. Unbelievable day today. And the other thing I was going to mention was for the up curve. So I'm trying to find, you can change the time frame if you want to do daily or 10-minute charts. But the up curve is basically a little bit of a formula in TC2000. And I may change this over time, but essentially is what I'm doing is I'm looking at the slope of the moving average between each day. So this just means that the 3-day moving average is greater than yesterday's 3-day moving average, and yesterday's 3-day moving average is greater than the day before's 3-day moving average, exponential moving average. And then this is just that the slope of the line is greater than the previous day's slope. So I want to see that the slope is kind of increasing. And so the great thing with TC2000, you have this easy formulas, and then you run that scan against whatever market you want. And you can add other criteria like price of the stock or volume or whatever you're interested in. And then you get this list of stocks that are, and you can see that pattern, it's not going to work perfectly. I'm still tweaking it here and there. And also sometimes it's gone up too much. This one's up 31%. So I want to I'll be finding things that are a little bit prior to just that point where but I mean, they still have room. You could look at if it's above the moving average, like I could add another criteria to only show me ones that have already gone past the 50 so that I don't have to wait for it to cross the 50. Like here, you can see the potential here. So that's mainly what I wanted to tell you is just my entries here. You want to try to get it close to the breakout and close to the moving average so that it's, at the beginning of the uptrend rather than chasing it. And if you're going to buy up here, you probably want to be careful with stop losses and stuff like that because they still have room potentially to keep going, but I'm trying to get it in right when it starts to take off. So if you have any questions, leave a comment and I'll try to let you know what I'm working on. But like I said, I'm still learning and refining, but it's been going well so far, and even in this crazy market. And I'm trying not to predict what's going to happen in the economy and with the virus and stuff. I'm trying to just trade the price action that's on these charts and not try to anticipate or be scared about a retest of the lows or whatever. I'm just trying to go with the way the markets are handling the current price action that's happening right now. So I'll talk to you guys later.